Hey guys, this is Julie. It is 10 a.m. Central, and the market is sort of just summer lazy day inside a very small contracted range. So I thought we would take a look at some quarterly, monthly, weekly, daily Globex charts. Here is the ES, and here is the quarterly. So you can see they have a very thick white line. That's a very powerful first standard deviation of the quarterly expiry. And as you can see, the level is being held as support at this time. So market is catching a bid here at these quarterly levels. So that's very positive that the market wants to hold on. We just started the quarter, and so it looks like we're catching a bid. The monthly, you can see that we're holding underneath the monthly mean, but it is not by any stretch of the imagination selling off. So we're just sort of floating around here in very low volatility. We'll look at the VIX in just a second. But you can see that these monthly and quarterly ones is extremely fortuitous timing to be able to find price there because you're likely to see price leave there. A good place to launch a trade from. Okay, so we've seen the quarterly and monthly. Let's look at the weekly. You can get even more granular with the weekly levels, trading to the ones, twos, and threes. Here the orange is a 3, and the whites are, of course, the 1, and I have multiple days to represent the 7 or 8 days. And the daily. The daily, is really the time frame to trade intraday. And especially, if you're in low volatility, you're going to find that that daily one is going to catch, resistance. So depending upon how strong that pin is, and we don't know, we can't see the dealer volume, so we just have to watch the VIX. If the VIX starts taking off, that would be when you would be looking to move the position lower. But right now the VIX is going nowhere but down. We did have a gap that didn't fill the other day. So I'm going to be looking at this last price, and here is the gap line. So between like 1420 and 1433, something like that, 1421 to 1433, little 10-11 cent gap, 11 tick gap. So that'll be interesting to see if that gap holds and we start going long vol. But they could break that, go down and test it, break it, and take this even further down, um, testing our lower fib area. So let's look to see. We got to the one or the full range, and then it did turn around. So that was a great reversal area on my outer VIX level. So that was a great trade for selling vol from that. Yep. Otherwise, it just stays inside the range. We have been in low volatility. Comes down to the 3. Okay, here's one it broke. The daily 3 to the downside and sort of floated around here. Did not get to a measured move. Here was a break, and it went to the fib, 0.25. Measured move. Nice 3 to 3, coast to coast, and then back down. Okay, here was a nice trade all the way down to this point 0.5. So again, that is the mean to 3, right there. Learn to spot them without having to get the ruler out. But here, some great, reversals on the fib levels. So we have not seen that upper line get challenged yet. We have been extremely low vol this year. So I am looking for, well, here was one. It got challenged twice, 3 times. So it went up. So here's your vol cluster. So once it, spiked out, then it continued going. It went down to a daily 3B, the lower daily 3, and then went all the way up, broke it, broke through it, came back in, and then the third day hit it again, third time. So 3 targets reached. That is amazing. So normally, you're not shooting for that one. You're shooting for the one below it because it hits it more often. You have a higher probability. But let's see what the PT2 was doing. So you had relatively low PT2 here. So I definitely probably would not have gone for that outside third one. But once the PT2 started escalating straight up, then yes, this outside one could have been absolutely the target. And same for this. Look how high this was. And again, sloped up. So these two, yes, I would have been targeting this last row. Target reached. And then look for the excursion back inside. You can, put higher targets on if you want to expand this out anymore. So we could put another daily on, but instead of going to 1, we can do 1.25, 1.5, 1.75, and 2. All right, so even a higher level. So there was a nice touch. You want to go to Six Sigma? This is the indicator for you. You can draw it. And, now that we know that they go to these levels over and over, there's a second touch of 1.75. Or, no, that didn't get up to 175, sorry. But it's still a 0.75. You can set algos to trade on those levels. and be there. And if you get that reversal, then you can trade it back down and then trade up when you get to the lower vol areas. I wouldn't go long vol in this market though. You have to be above these triggers to go long with upward sloping higher threshold. So you have some specific conditions that you can bake into your algo to capture this long vol. As likewise, if you want to just capture algos trading short vol, you can do that too. Still sitting on this daily one. Um, so that's no surprise to me at all. I mean, I was expecting that. So here's the Globex. And this is a fantastic distribution because, as you see, these Globex 2s and 3s get hit all the time in the RTH session, as well as the Globex session. So, and then I put daily 3s on top of it. So Globex with daily 3s. And this, I like to use this template a lot. And I'll look at it a lot. See if I can get, a touch to something. RTH template is really good for the daytime. You can put the 1 hour IB in the RTH and get a pretty good day trading little template going for yourself. VIX, the 23 7-day, 23, 30, 37-day distribution, pretty good. You can see we're right in the middle of it. We have until, I guess, next week. What day is my expiration next week? Let me take a look at that calendar. I like the one from the CBOE right here. Yep. And so in July, it's going to be the 21st. There's your standard expiration date for equity indexes, and the VIX is the green, so that is going to be the 19th. So next Wednesday and Friday. So next Wednesday, it looks like we're going to be in the middle of the range. So I would anticipate going, low vol into this. Um, we absolutely know what to do if it's going to be going towards one of the 23-day edges to challenge it, so we know where that is, and to look for vol to go directionally that way. And then you can match that to your pricing sheet for your options. Here is a 90-day distribution, and you can see that I can put various distributions, set them up for 12-week or 3-month. Here's a 12-week, 3-month, and 90-day. So between those three different manners, the way I calculate the trading template for that time period, I can get these distributions, and they are awesome. They are awesome. So they absolutely are a really good distribution for the ES, I think. So you should definitely want to check this out. 12-week, 3-month, and 90-day. Run those threes on a chart like this, and maybe your threes and ones, and see if you can get some fantastic, look at this, opportunities. Mm-mm-mm. Um, we know what the daily range is. We know what the weekly range is supposed to be or expected. And 30-day, we know what that 30-day range is expected to be. And you can look at these option expiries, especially the 7-day, 30-day, and see how often price stays inside that channel. Very rare do you get a break of this, and for good reason. I mean, you don't want to be breaking the spreads, or nobody would be able to invest. You need the pension funds and the profit sharing funds and the government funds to be able to have a safe trading plan. So that's why the spreads work so well, so many different times. So you basically sell premium outside these levels, calls and puts, and you can do so in different combinations. You can trade spreads and straddles and strangles, um, butterflies, calendars, whatever you would like to do, ratios. But I like, a couple of very simple, keep it simple strategies. So we like short strangles, and we like call spreads and put spreads too. But pretty much stick to that. That's enough. That'll get you plenty far. 28-day, you can put these different time frames together to give you an idea. Does your time period that you're interested in look like, it gets challenged a lot? And what happens if it does get challenged? Here was a little challenge here for these different time periods that are a little bit off the radar. Instead of your standard periods, you can make them any period you want. And with JATS PT, then you can visualize where those edges come in, and you can, say that's a good idea, or no, I don't like it, or oh yeah, that looks great. You can put the distribution the way you like to build it on your chart and try to see if you can monetize that. You can do this in stocks too. It works the same. In fact, one day I'll do a stock presentation. So gaps, make sure you understand where gap walls potentially are. We have a gap up here. Above that line, going here. So if we get the opportunity to come back and test that, that's what you would be looking for. 44.75 to 44.80, 150, something like that. But right now, I don't think that's today, right? Right now, the market is asleep. Summertime, summertime. We've got CPI, PPI coming out. So here we are, just sitting right under the daily ones. And so we might get some volatility, but the volatility is so low and so compressed that one day these upper ranges are going to get challenged and big candles are going to print again. And you can know where that is on your chart because you'll be sitting here waiting for it. You can have alert go off that if there's anything above 14, right, to give you a ring-a-ding-ding, and then you'll know that price is, taking off. Or you can just go to sleep, right, with the rest of the market, like right now. All right, guys. Well, that's it for me. Appreciate it. Tomorrow's training. So if you have time, stop by the Skype room. And if you're not a subscriber, just go over to the website. We'd love to have you. JAuto Trading Strategies. Right here, you can click and subscribe for the price oscillator and PT indicator.